Good morning. This is the pre-market report for 29th April 2022. Now, in the title you'll have seen I have put special announcements. Now, the announcement is regarding one service that a lot of people have been requesting me to do over the past few weeks, and that is a trading workshop / mentorship. Now, today I'll be sharing a PDF that will have all the details about that. I'll share it on my Telegram group, on Twitter below this YouTube video's post, and also on the free WhatsApp groups. Now, the workshop / mentorship will include access to one of my quant indicators which I utilize, then the entries and exit setups and strategies which I utilize, after which there is 2 months of daily hand holding, and then also after which will 4 months of weekly hand holding. So that will ensure by the end of the workshop that everybody should have become an independent trader rather than relying on someone for trading advice constantly. So if you're interested in it, do look at the PDF and see more details about it, as it will focus on even how to catch the freak moves that happen in positional plus intraday trading, as it is both for stock market trading and for day trading and positional trading using FNO. Now, when we come to today's trading plan, we can see that the American market did well last night as they had a decent rise. So now it will be interesting to see how the Indian market follows through. Now, why I am saying that is, yesterday I had said that in the 4-hour chart, if we simply looked at the price action with the moving averages, I was expecting it to come and get stuck at the change of polarity level plus the 20-day moving average for the bank Nifty, and the Nifty towards the 200-day moving average in the 4-hour chart. Now the indexes have done exactly that, but now the Nifty has reached another crucial point as it's trying to pop out of box range number 1, and if it does pop out of that, then it will have an up move. But now that is all going to be dependent upon this 50 moving average line, as we can rise up till there, and if there is no bullish trend to cross that, then we will come back into the box range. Now, when we look at how we should trade today, I would call it a trading session in which we'll get a both sides move. The only reason I'm saying that is if we have an up move in the earlier part of the day, which is looking likely to be the case, then we will have most likely see profit booking towards the end of the day because of the weekend. So I expect a move on both the sides today. I first expect basically we will have a small gap up as what the SCX is indicating, a tiny one, not a big one, after which we may come down a bit or we may rise a bit. If we rise a bit, then we might have a small pullback and a fresh rise towards the 200-day moving average, 30-minute chart on the bank Nifty, and the 200-day moving average of the Nifty, and also the 30-day minute chart. The only reason I'm saying if we have a small rise, we might come down a bit, is that we have wandered quite far away from the moving averages, and that can usually cause a bit of a cooling down and then a move to the upside. So now let's look at quant levels, as that's going to be a heavy determinant on what happens today. Now the first resistance level that we'll have to address is 17,330. This is going to be a major resistance zone, and if we breach this, I believe we will might have a slow rise, but we will have a rise to 17,460 if we breach 17,330. 17,460 will cause a lot of trouble for the index, but if we manage to go through that, then 17,540. I do not expect it to go any further than this, so I would classify these two as being very important resistance zones in the Nifty. However, if you were to take a move to the downside and go towards the moving averages, as I said, the Nifty has wandered off quite far away from them. Then 17,150 is the first support and 17,030. So if we see a fall towards the moving averages, now that's nothing to panic, as we're just coming back to home base before going back in the trend direction. Plus we're in the box range, so we will get a bit of erraticness in the whole larger scheme of things. Now when you come to the Bank Nifty, on the resistance front, 36,490 is the first resistance, after which 36,700. I expect 36,700 to cause quite a bit of trouble for the Bank Nifty, and 37,020. I've highlighted up to 37,860 as quant levels, as we have had a week that has been in the box range. So we may get finally a trending move, but it again all depends on the same characters of yesterday: HDFC, Bajaj and Reliance. These are still holding the whole game, and I would say the majority player holding the game today is HDFC Bank. If that can start its move, then we will have it can force a short covering to occur. If it does not, it has a normal up move or a flat day, then we'll have a slow rise, or we'll trade within the same box range pattern. Now on the support side, for Bank Nifty, 36,230, 36 and 35,940 to 36,050. These two are the important supports to watch as of now. However, if that breaks, 35,600. The Bank Nifty is still well within its box range, so it's got a lot of resistance still to encounter rather than the Nifty. Thank you for watching, and do like and subscribe to the channel, and I will share the PDF in the tweet and in the WhatsApp groups and in the Telegram group.